The Green Finance Institute was set up last year as a result of a Green Finance task force, which was established by the government, which is looking at how to green the UK society. I'd like to make the difference between London as an international capital market centre, which is doing a huge amount in the green space, and the UK, which has been in a good space because of the UK Climate Change Act from 2008. But in terms of nomenclature and descriptions and taxonomy of investment instruments, it's not there yet.
So I think the city has been very, very at the forefront of looking at ways to finance green and to green finance both. There are a huge amount of innovative products that the London Stock Exchange is launching, green bonds where we are world leaders, and a depth of capital in the UK that I think the Dutch are particularly interested in looking at. From the Dutch side, there's over 1.3 trillion in assets under management for pension funds. Some of the biggest in the world are based here, and they have a very, very deep relationship with the UK. So there is a lot that we can do on financing. And what I find interesting about both countries is that forward-looking investors in both places are really looking at ways to address this agenda because they want sustainable investment for the long term. Strategy here on investment is not to buy and sell, it's to take and hold. And if you're going to do that, you really need to think for the long term.
Our title here is about managing climate change risk for investors, and I think I'm one of the few bankers to be talking to you this week. I thought I might say a few words about how the banking industry is integrating climate risk into credit analysis, because this, of course, directly informs the investment products that we're creating to manage climate risk through green bonds and the like. These last few months in particular have been extraordinary for the climate discussion. In the UK, we've even seen Brexit pushed out of the headlines by a remarkable young Swedish lady, just 16 years old, who visited the British Parliament to wow them when she talked about climate disaster. We also saw a sobering report from the UK's Committee on Climate Change, as well as the IPCC report reinforcing the urgency that we all need to have in us when we are talking about climate warming. We should be seeking ways of achieving a lower Pillar 1 capital weighting for climate-proof lending, making green loans a better loan in every way. If we crack that, we've cracked the financial climate risk challenge. Ladies and gentlemen, there are many challenges, some red lights ahead of us in the road, there are lots of green lights too. Many of the actions that the financial community is taking today are unrecognizable from where we were just a few short years ago. That's good, especially as we're told we're running out on time. Well, I believe we are winning the war on bringing climate risk into financial analysis. Yes, there are many battles still to be undertaken, and urgently, and that's what we're all about. Thank you very much.
I think the financial markets have been making progress, but we have to take heed from the IPCC report, the Intergovernmental Panel on Climate Change report, published last October, showing the difference between 1.5 and 2 degrees. We have to start acting at pace and accelerating our efforts through finance. My experience, having worked in the financial sector, is it's not one thing that will change our focus on greening finance and financing the green. There are so many different things that have to change. And the Green Finance Task Force, which was originally set up to think about supporting the clean growth strategy, one of the points that I brought to those discussions was, as chair of the Environment Agency, what's the point of investing in energy efficiency if it washes away in a flood or melts in a heat wave? And I think where we've got to from a climate change perspective is we need to be thinking about this work in the round and the many, many different interventions that need to take place. So the Green Finance Institute, located in London, in the heart of the city, will be a great space, a safe space for some of those discussions that need to take place, bringing financial regulation together with the banks, together with the asset managers, closer also to some of the environmental regulation to make sure that we're shifting at speed.
I'd like to welcome everybody to the first of 2 expert sessions. I'm really pleased to be moderating this panel of experts to talk about green finance strategy and the City of London as a hub for green innovation.
Green finance is not some new mysterious financial product. It's not like blockchain Libra or anything like that, or anything fintechy. For the most part, it's simply the application of existing corporate financing tools to green and sustainability projects and companies.
This is all part of the rise of purpose-driven finance, purpose-led finance. Green bonds, I think, green finance is a very important part of it, but it's not the only part. And I think it's what society is saying. We want to know what the value of money is. We want to know where money is going. We want to know what the purpose of money is.
And it's a very important point, exactly how we're going to scale up from the billions, or even tens of billions, hundreds of billions as we are now, to the trillions. Let's get some sense of perspective here. At the moment, I'm very pleased to announce that 2 days ago, $200 billion worth of green issuance this year, which is the first time this landmark has been issued in one calendar year.
I fundamentally believe this sorts of investment performs, and that is the track record that our fund has shown over the last decade. The value for money point is very much about, because these are public servants, if you compare the contribution from the sponsor, it is low from a contribution. So it's meeting all of these factors.
And on the back of that is one of the reasons why, since the 1990s, the UK actually has reduced its emissions by over 40%, whilst growing the economy by 2/3. So one of the best records of the G7, showing that we can have emission reduction and clean growth at the same time.